The big event for both Bitcoin and crypto, the Bitcoin halving, has just taken place, with the rewards to Bitcoin miners dropping from 6.25 Bitcoin per mine block to 3.125. The reason why this is important is quite simple. Number one, markets anticipate this as a bullish event. They try to front run it. We just saw that. And in terms of why this is important for the market cycle, you're having a reduction in supply with ever increasing demand. We're going to go through some reports from both Grayscale and Fidelity Investments. Of course, sources linked down below. We have the current article from Cointelegraph saying the landmark occasion sees a reduction in Bitcoin mining rewards dropping again from 6.25 to 3.125 Bitcoin. This has another effect too. It's going to put pressures on miners. Those big miners will be able to handle this, not a big deal. But this is a turbulent time. Some of those less funded mining operations, they probably will capitulate and a consolidation will take place where really, of course, the strong survive and the weak wither away as they should. A lot of predictions out there. Bitcoin to reach out as high as $250,000 a coin. Just from prior market cycles, I wouldn't be surprised if we have a little bit of a lull here. Of course, that shock to supply will take some time to have a significant effect. And once you're by this very exciting event, some of that FOMO will start to subside. We'll see some miners capitulate, some disruption in that industry. And of course, within financial markets, typically we can hit the summer doldrums where things slow down a little bit. This could be a totally different ball game. We saw that previously. Leading up to the halving event, you had the first exchange-traded funds be approved by the SEC, with really BlackRock and Fidelity leading the way and bringing a lot of extra flows into the Bitcoin asset. We've never seen Bitcoin hit new all-time highs pre-halving. This definitely is different. This is novel. We will see it play out. Longtime Bitcoin investor Tim Draper says the following. The simple reason that Bitcoin's price goes up after the halving is that supply goes down. And with a continued upward pressure on demand, the price naturally goes up in a free market. So kind of what I said to open this video. Pretty straightforward stuff. Now we have this report by Grayscale. It's from April 9th, and it's titled Market Bite. Glass half full, favorable Bitcoin backdrop continues. I think what's important here, again, they're not saying Bitcoin guarantee or crypto's going to go up for sure, especially here in the short term, because there's a lot of risk out there. So there's a ton to be excited about here, but we got to keep our eye on a few risk factors. Quoting from the article, despite evidence of a strong economy, the Federal Reserve will likely stick with its plans to cut rates this year because short-term interest rates are well above policymakers' estimates of what is neutral. We're hearing all sorts of rumblings out there. We're going to be higher for longer. They may not cut at all. I'm of the same opinion. We're going to see at some point those rates come down because I think they have to. But the longer we stay in this restrictive fiscal policy, the longer those rates stay higher, there's significant economic risk, especially here in the short term. Keep your eye on that. In Grayscale's research view, the macro backdrop, as well as favorable supply and demand technicals due to the halving, that's what we just saw, could be consistent with further increase in Bitcoin's price this year. And that would align with what we've seen in the past. You go through the halving, you have the supply shock, and on the short horizon, a few months down the road, the bull run continues. Might happen tomorrow, it might take longer, but if history is any guide, we're getting close. Continuing with the article. There is an increasing conversation in crypto markets about Ethereum. So this is off to the broader crypto market into altcoins, which faces competition from other smart contract blockchains. You got to understand Ethereum is the one everyone is going for. Layer 1 smart contract blockchains have the most competition there is. The Ethereum blockchain has the most robust ecosystem. We have layer 2s, dApps, all sorts of things going on within DeFi and gaming and Web3. It's the place to be. But at one time, so was BlackBerry. That had all the applications until here came, iPhones and Samsungs. So you got to be careful here. But also we have a pending decision on a spot Ethereum ETF. That's the next one on deck. Is the SEC willing to approve that? If they do, it'll be massively bullish. I think not only for Ethereum, but the broader market. It's just a matter of time. But we know, the SEC's policy is relatively combative to cryptocurrencies. They want to slow us down all they can. And without that court decision like we saw in Grayscale pushing their hands, are they going to give us that approval? Some people tell me yes, some people tell me no. We'll find out. Bitcoin's price has consolidated in a relatively narrow range since reaching all-time highs on March 13th, not that long ago. Now this is the important part. Although certain macro risks have increased, so we see what's going on in the Middle East, definitely causing an increase in risk. We're having troublesome signs in the economy. We're in a time of elevated risk. And even with that, Grayscale sees a glass half full type of setup here, where there's more to be excited about than there is to be scared of. The general consensus here is prices continue to go up throughout the year. Keep your eye on, of course, inflation numbers. Keep your eye on the tech sector. Do we get another big push from artificial intelligence? Does that keep tech going onwards and upwards? And of course, the expansion of war and conflict, is just another risk factor we got to keep our eyes on. Now, from Fidelity, really interesting report they have here, Introduction to Channel Splicing on Bitcoin's Lightning Network. So they're really digging in here, looking at various layer 2 solutions with Bitcoin, which there's a lot going on. I don't see enough people covering this really emerging area of cryptocurrencies. The purists, they don't like it. They just want Bitcoin to be a digital gold, a storage of value. Anything you do above and beyond that is some sort of blasphemy. People are going to leverage this value in technologies in novel ways. And if it creates value, people are going to use it. And I think with all the building we see on Bitcoin layer 2, paired with the success we're already seeing with Ethereum layer 2 scaling solutions, I think there's something there. And it's a lot bigger than just Lightning. Fidelity really digging into this. If you're interested in this splicing of Bitcoin's Lightning Network, you want to read further, the source will be down below. You can check that out from Fidelity. Lastly, really interesting legal case here. The individual's name is Avi Eisenberg, and he was convicted of fraud of $110 million in the Mango market scheme. And fraud within cryptocurrencies isn't that interesting. It happens all the time. But what happened in this court case, he didn't deny it. He basically gamed the DeFi system. Eisenberg never disputed the facts of his strategy, but contended that it was legal and permitted by the DeFi protocol. So the software let him do it. And he says, hey, code is law, and if it allowed me to do it, it must have been legal. Essentially what he did, he used inflated futures holdings as collateral to borrow other cryptocurrencies on the platform, then quickly withdrew those assets and walked away with all the collateral and rug pulled everyone essentially. And so this was the first case of its kind. Like, you misused the software in a way it was not intended for. You knew what you were doing. You were taking a bunch of money that you weren't, I guess, supposed to by the design of the system, but the DeFi protocol did let you do it. It technically was by the rules of the game as it was set up, but they didn't care. Again, you were misusing the system. You knew what you were doing. You were taking advantage of flaws, and they nailed him here. Now we're going to have to see what his sentence is. It's coming up here soon. But again, $110 million in fraud, found guilty. He's looking at some serious time. And I think this sets some case law that shows, look, if you're going to play games, just because it's within cryptocurrencies doesn't mean you're going to get away with it. Just because the technology is different, the technology is new, we're going to use common sense application of the law. And this gentleman found that out in a significant way. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.